Bringing you up to speed is a theme for this year's annual report from NetLink NBN Trust. With internet speeds now at almost 1 gigabit per second, Singapore's internet has come a long way from the old days of the much slower dial-up modems. Hello, my name is Benjamin Goh, and I will be walking you through the key highlights of NetLink NBN Trust's annual report for fiscal year 2018. We will look at the Trust's financial results, its key business drivers, and strategy. And along the way, we'll provide you with some questions that you may want to ask the Trust's management in the upcoming annual general meeting. As you may know, a consortium was formed in 2008 to install, operate, and maintain the passive infrastructure and systems of Singapore's next-generation broadband network. What is passive infrastructure, you may ask? Well, that's optical fibre cables, underground ducts, manholes, and central offices used to host active network equipment. Your high-speed fibre connection is delivered to you through this nationwide infrastructure. NetLink Trust itself was formed in 2011, and over the years, the assets from Singtel and the original consortium were transferred to NetLink Trust, so that today, NetLink Trust is the entity that owns and deploys all the fibre optic infrastructure that enables us to enjoy our Netflix binges, Korean dramas, and online gaming. NetLink NBN Trust was established in 2017 to own NetLink Trust. As Chairman Charlie Ma writes in the annual report, the long-term strategy of NetLink NBN Trust is to build a network infrastructure that anticipates Singapore's growing needs, to be efficient in our operation, and to increase our potential market size. Revenue for the first financial period from listing date in July 2017 to the 31st of March 2018 was $228.6 million. This is 1.8% below the projection of $232.8 million in the IPO prospectus. One question that you may want to ask at the upcoming AGM is whether management continues to expect revenue to track closely to the financial projections previously provided. As highlighted in NetLink NBN Trust's strategy statement, operational efficiency is one of the key areas the Trust wants to focus on. This can be seen clearly in the Trust's EBITDA, that is earnings before interest, tax, depreciation, and amortization, which stands at $167.3 million and represents a 3.8% improvement over the Trust's forecast. This was mainly driven by lower operating expenses. Profit before tax was $43.8 million, which was 15.8% higher than the IPO forecast of $37.8 million. The depreciation was $111.8 million. Another interesting question that you can ask is whether or not depreciation expenses are expected to increase as the company continues to invest in infrastructure. The annualized distribution yield of NetLink NBN Trust stands at a healthy 5.7%, which is above its projection of 5.43%. Moving on to the balance sheet, the total assets was $4.38 billion and the net assets was $3.2 billion. Net cash generated from operating activities was a healthy $158.5 million and cash balance stood at $166.5 million. Long-term debt is up by $81.1 million and is driven by the utilization of a revolving credit facility to fund capital expenditure. With an interest coverage of 9.8 times and a net gearing of about half of a typical real estate investment trust, we think that NetLink NBN Trust has sufficient debt headroom to fund future investments. And a question that you may want to ask is, does the Trust plan to increase its debt further to fund future investments, and if so, by how much? With that, we've come to the end of our presentation. The annual general meeting will be held on Wednesday, 25th of July, 2018 at 2 p.m. at the Stephen Riley Auditorium, NTUC Centre. The annual report is already available online. Be sure to read it yourself before heading down to the AGM. Thank you very much and see you at the AGM.